5 steps to improve your cash flow. Step number 1. Choose the appropriate accounting software for your needs. There are accounting software that not only raise sales invoices in seconds, either through your computer or through the use of a mobile phone, but also they send automatic reminders and statements of account whenever you decide fit. So this software can send reminders to your clients for their outstanding balances every month, every 3 weeks, every quarter, or depending on your needs, in any frequency that you see fit. Improve your inflows, your cash inflows. How you improve your cash inflows? There are very simple techniques that you should take on board in order to improve your cash inflows. First and foremostly, for small jobs, you can request that 100% of upfront payment is made before you proceed with the provision of the service or the sale of the good that you produce. The second way to improve your cash inflows is to have a certain policy in place so that for large orders you take a certain amount of upfront payment at the agreement stage. The second payment should take place once a milestone has been reached, such as 50% of the agreement or 70% of the job is being done, and the last part of your fees or for goods or services should be repaid once the job is being entirely completed or the goods entirely being received by the client. Therefore, your last settlement should be approximately 20 or 30% of the total value of your fees. This will definitely improve your cash flow, as you will not be burning money or suffering costs in order to generate the service or to export or to create goods, so that you will get paid after 6 months, 8 months or a year's time of these fees with a small margin that you will put on top, introducing the standing order payments into your bank account. This is something that we have done as a chartered accountancy firm. This is something that we have established in many of our clients who offer services. This is because our clients enjoy our services on a monthly basis, and it makes perfect sense for us to be receiving our fees on a monthly basis. This strengthens our own cash flow as well as our clients' cash flow, because it gives them enough space, enough cash room to maneuver and promote their business further. The third way to improve your cash flow is by monitoring your cash outflows very thoroughly. This can be achieved by knowing inside out your cash outflows throughout the year. What I'm saying by this is that if you are a business owner or if you're a director of a company, you must know inside out the months that you get paid less money because of various circumstances. These months are commonly Easter break, summer break, the Christmas break, as well as these are the periods where the VAT and the provisional tax are being paid. These are crucial periods because these are the periods where the companies have less cash amounts, either because their employees work less time due to holidays or because a large amount of money is being paid for VAT purposes or for corporation tax purposes. Last but not least, let's not forget December, where employees get their 13th salary, which is a real killer for all Cyprus businesses. Once the director or the business owner knows these outflows inside out, then they can carefully plan for the remaining months how they want to use their cash. Therefore, they will not be surprised by any outflows that are due, and they should all to know that they are due for these occasions. Another tip to improve your cash flow, especially if you are a smaller business, is if you are a shareholder and a director, to reduce your salary so that you will take the remaining of the salary as a dividend. This makes not only tax sense, but it also makes cash flow sense, as you will be allowing the company to keep more cash for its operational needs, and at the year end, once all its obligations are being met, all taxes have been settled, what is left can be paid to you via dividend, which will not only save to you pay as you earn tax, social insurance tax, but as well as you will pay a lesser amount as a dividend income tax. The fourth way to improve your cash flow is what I say, the rigorous review of your bank statements. Every now and then you should be printing out your bank statements and sit in a relaxed environment and go line by line of all your bank movement and highlighting or circling the items that you no longer need. Usually we keep ignoring our subscriptions, we avoid canceling them, or we keep paying stuff that we don't really need as a business. Every now and then we should cut those stuff as 200 euros every month or 10 euros every month, accumulate 200s of euros at the year end, or 2000s, which are money that we do not enjoy but somewhere else is. Our fifth tip to improve your cash flow, which is not something new of course, is to try to find yourself another source of income, another source of passive income. So you have your company here generating a steady income for you. You also need another source of income here. This other source of income could be a corporate source of income or a personal source of income, so that your overall cash flow as a shareholder, as a director, or as an individual improves. This passive income could be, if we're talking about corporate, at the corporate level, it could be a corporation, a referral scheme with other industry providers or with other services, which could be connected to the operations and to the services that you already offer. And if we're talking about an individual passive income, this could be a rental income, or this could be a sale of some other service which requires much less of your time and there is a current need for. Obviously, I don't know what you're good at and what kind of passive income you can generate, either at the corporate level or at the personal level. However, if you can, then it's brilliant, because your cash flow will improve tremendously. In a summary, 5 steps to improve your cash flows are the following. Use of appropriate accounting software that will automatically send sales invoices, chase debts, and send automatically reminders for outstanding balances due. The second way is to monitor your cash inflows by using clever techniques such as full upfront payment, standing order payment, or stage of completion payment for your goods or services offered. The third way is the monitoring of the cash outflow, which requires the director or the business owner to know inside out the outflows, the cash outflows within a calendar year, so as to carefully plan the operational needs of his company. The fourth trick or method is to rigorously go through the bank statements every now and then and identify any hidden costs or recurring costs that you have omitted to cancel or you continue paying without really needing them. Last but not least, the fifth way of improving your cash flow is to identifying a passive income, either at the corporate level or at the personal level, so that all incomes join and you will be able to enjoy and live a better lifestyle.